Good morning, ladies and gentlemen. This is Clueless 8, and this is the pre-market AM report for June 8th, 2015. Volatility continues in the market, and despite all the random and unprecedented sudden market swings intraday and intra-week, Clueless 8 members and focused, disciplined, and active traders have managed to do very well. We have had some substantial wins within a course of days, and some of the fast-moving momentum stocks that we tend to trade in and out of uh, have generated weekly option returns in excess of 100, in some cases 400%. Netflix, the Pricelines, the Amazons, and a slew of others, just to name a few. If you'd like to see a more detailed list, feel free to scroll down on the real-time Twitter feed at Clueless8RT that every paid member on the platinum, gold and platinum service have access to. So we also have also a couple of our swings, just as a strong reminder. Some of the biotech side, like Juno, Kite, Blue, all these type of companies have just been going through the roof. We have had some small cap winners in the form of MOMO, Tube, CLLS, another biotech winner, and things of that sort, which I highlight all the time. Time to time, we have had some very sharp moves depending on the oil market. On UWTI, we play EOG as a proxy on oil, and those have also done very well. It is imperative and mandatory for all members, and I cannot stress that strong enough, that you follow and use the real-time Twitter feed as a very effective tool in order to determine what I'm trying to do and my forecast in the market. Extremely important. The chat room is fine. There's general conversation, views, and it's a lively venue. However, if you want pinpointed tactical information on market inflection points, individual stocks that I'm buying, weekly options and such, and options in general, then obviously you have to track the Clueless Time real-time feed. In addition, these video casts, which I've been doing both pre-market AM and the end of the day reports, and more pre-market AM reports, because the market volatility has forced the front end of the market, which is prior to, from a trading perspective, prior to the market open, is really critical versus discussing something the night before when things are randomly changing overnight. Like to mention to everyone that as we go through the charts, I want to explain a couple of very important factors which have to be taken into account. The market right now is undergoing severe and critical bond volatility. Just like a stock, if you imagine, which drops 30%, you get massive margin calls if you have any type of position in that stock, especially a larger one. You will have to come up with the cash to pay the margin clerk, or else he sells you out. He either sells that out or any other meaty position within your portfolio that will generate the cash to meet the margin call requirement. The same thing is happening with the bond market. The bond yields over the past since actually that's much more of a longer term chart. The bond deals, as I've mentioned repeatedly and shown some fantastic charts on that and predicted that this might be happening, have risen almost 30+%. If you can see that here, since February 6th of 2015. When you get spikes of this nature, you are inevitably going to get a level of panic. Keep in mind that the bond market is a large ocean, and the body of the iceberg and the tip is basically stocks. So when you have bond volatility, and just in the US alone, bond rates have gone up 30%, and more, to be honest with you, 40% from this level, and recently from this 1.85% level. This is the 10-year government bond, which is used as a proxy in setting interest rates for a lot of consumer products, business lending, and such. We're all aware of mortgage rates and all that. When that ramps from 1.85% all the way up here, as you can clearly see, there's going to be some jitters in the market. Now, this is happening for different reasons. One, the fear that the Fed might act quickly. Second, global volatility, specifically Europe. And most importantly, a technical sell-off in the bond prices, which move inversely to bond yields. I repeat, bond prices move inversely to bond yields. So when you have prices drop, when yields rise 30%, what do you think is going to happen to the price? The price is going to drop accordingly. And you are met with fierce multi-million dollars, hundreds of millions of dollars of large institutional margin calls that have to be met. That is settled during the day and overnight constantly. That is one of the primary causes for the volatility. It is mandatory for members who really like to be focused, make money, and do well in these extremely volatile times. Read, or at least glance, the extremely relevant articles that I tweet out on the private Twitter feed. At least glance at them. Read the first paragraph. It's extremely important for your financial well-being, in my opinion, if you're a trader or even an investor. Saying all that, let's take a look at. Let's start with the S&P 500 to give you an idea where we stand. The SPYs would be a good bet. Okay, this is a clean chart. I have the October 15th lows, and keep in mind this huge drop in the market that was more than 1,200 points in the Dow, which happened over a very short period of time last September, in about a month, and then this humongous rally. But this drop was because there was a fear, there was a rate tantrum that the Fed was going to raise rates quickly, and the high yield bond market had a really bad time. Liquidity starts drying up, and that's what's in a smaller way happening right now. Prices collapse on the bond side as yields rise rapidly. Remember, it is not where yields are going. Yields can move higher. We can move to 3% plus and still handle the U.S. economy would be fine. It's the rapidity of the move that scares the living daylights out of the financial markets. So be aware of that, because without that, you're not going to be able to manage your trades. I give enough tactical entries and tactical exits, but at the same time, you have to manage your trades. And if the volatility is hitting us like a tsunami back and forth, then it is your responsibility to manage your trades. Take the profits, use me as a tool to gather what the market directions are, and we go from there. Extremely important, especially for new members. This is not a babysitting service. This is a real traders club. We are an active trading community with a focus on financial education, period. Okay, so here we have a trend line from these lows when we realized that the world wasn't going to collapse, and the high yield market, specifically on the oil and energy side, a lot of the shale companies were not going to completely disappear. You had a massive relief rally. This was massive. So, do I think that something like that is going to start happening right now from these points? I don't think so. I think it's going to happen from slightly lower points. Saying all that, this is the trend line. We are testing, we close slightly below the 50-day moving average right here, this red line. We are right at the bottom of the Bollinger Bands, so we're certainly oversold on a short-term basis. We're not oversold on an intermediate-term basis, and I'll show you in a second. And if you're looking carefully at this chart, you'll clearly see why. We're not fully oversold. This is full oversold conditions like we experience, and it gets really scary at that time, and I love it, because those are the buy points. These are the real buy points. Let me get my drawing tool out here. Look at this type of stuff. Okay, so when it dips below the 30 mark and it gets towards these levels like this, then you start to really get excited about using your deployable cash in the market and buying and trading and winning. So at this point, we have an acceleration band here at around 208. We have another support level here around 206, 207, and then we have a very strong triple bottom support at around 204. Want to play it simple? It's like 2040 on the S&P, 2060 to 2070 on the S&P. This is 2080, and this is where we are right now. If you look at this particular pattern that's developing, and I'm not talking about 15-minute stuff here, then we have a head, we have a left shoulder, we have a right shoulder, which is here, and we can bounce up here. We can bounce and make a move up here and test the right shoulder. And if we break the right shoulder, believe me, we're going to make a new high. But in lieu of that, if this pattern continuation goes, we will have a bounce here, which will take us up to around 212 on the SPYs. And then we're going to complete the first part of the pattern, this major support level. If we break that, then this comes into play. If we bounce from here, same old story. We're going to bounce up. We're going to engage the 50 and the 34 moving averages. If we break above that, then we're going to test the back end of the back test, the rising trend line. If we break above that, then we're going to go higher. If we fall below this, then the same levels come into play as support. What is resistance becomes support on the way up, and what is support becomes resistance on the way down. It's really quite simple. So saying all that, at this point, what we have here is a pattern which I believe needs to get filled. Now, this being the middle of the month, extremely important, and I've said this multiple times, and people who have followed me know I've been very correct on this. We have a very, very, very volatile, extremely extra volatile week coming up in here. We have the middle of the month, which is normally a dangerous time, give or take a day or two from the 15th. And so this week is going to be one where you have to manage your trades, act quickly, be flexible, and do all kinds of stuff that we do. I believe we're going to do very well this week, in my opinion. I know I will. That's the mental fortitude and the mental attitude that I go into on a Monday. Volatility doesn't scare me. It keeps me on my toes. So that's really where we are. So bottom line is, what would be nice is if we fall, we test this level initially. Okay, this becomes oversold, or we drop quickly here, which would be roughly about a 300-point drop on the Dow or more. Okay, and we come down here, we get very oversold. People start to get really scared, and we move from here and make a new high on the stochastics. We get overbought, and the market bounces. So that's really the game plan. And within that, we're going to play the stocks that we play, but you have to be aware of what's happening on the outside. We have Greece, we have retail sales on Thursday, we have all kinds of stuff coming through. I'll put the calendar up there and highlight them for you guys to monitor where the volatility clusters are, i.e. where the market goes nutty and you guys and a majority starts to really lose their heads. So let's stay calm. So that's basically the picture of where we are right now with the overall market. But this is a rising wedge, an ascending triangle again on an hour on the daily chart. And the bottom line is this ascending triangle, which broke out here, okay, now has come down and is testing the bottom of the wedge, because this is the wedge. There you go. So the top end of the wedge is around 2160. Will we get there? I think we will. Do we get there in June? I don't know. We might. If we have a nice sharp sell-off this week, it'll set up for a big buying opportunity towards the end of the month when we have the portfolio dressing and the month-end markups. So it's really quite simple. We need to see the stochastics, and people have to follow the stochastics. The simplest way to look at whether we are overbought or oversold. So we get down here, okay, maybe we get a little choppy, and then you're going to get overbought. The dead cat bounce, the infamous dead cat bounce, which makes a lot of money. Or even a life cat bounce, as I say to my advanced session members. So we have had some fantastic advanced coaching sessions. People, I put the testimonies, there's testimonials out there. Read them because it's a real deal. We spend a lot of time on that to understand what goes on and make money off that. Let's start off the week with a positive note. The market doesn't have to be positive. Our P&Ls have to be positive, long or short. Let's stay sharp. Thank you for listening.